Oil Technical Analysis, June 22nd, 2011. CommoditiesMansion.com. The move that we anticipated yesterday did in fact happen, as we did, based upon the hammer on Monday, pop up relatively quick. We suggested that perhaps it was going to be a fairly quick move because obviously there's a bunch of resistance there, and that's exactly what's happened. It's been a matter of a little bit of a relief rally, possibly, as the area is extremely supportive, and it would make sense that after a fall like that we may kind of bounce here. However, it should be said that the lack of conviction towards the end of the day does have us a little bit concerned, as we have certainly pulled back, and we're becoming more and more neutral on this pair, with the understanding that a break of 90 is extremely bearish and could send us down to 80. Looking at its cousin, the Brent market, you can see that the Brent market did fall again today, although it had more of a doji day, and it is still in the midst of a big consolidative zone in the form of 107.50 to 112.50 or so. Because of this, it's going to be hard to sell this, although it must be said this market is looking weaker and weaker. If 105 gives way, which would be the ultimate bottom, we really don't know where this would end up. One would have to suspect back into double digits pretty quick. With the various problems going around in the world right now, this is going to be a extremely headline risk oriented market, and as such it's going to be very difficult to trade. It's going to be very hard to short here, but there's no real technical setup to go long really either. So for the time being, we're kind of sitting on our hands with oil, waiting for it to show its cards, because once it makes its move it should be fairly obvious. But one must say that all in all, it is starting to look weaker for both of the oil contracts.